Hi, welcome to this video, which is about one of the forgotten legends of the investment world. His name is Bernard Selim Ben Smith. He was around at the same time as Jesse Livermore. While Jesse Livermore is well known, this guy isn't at all. Yeah, he was a far better speculator than Livermore. He's got a colourful history which I want to go through here, and also what we can learn from him. He was born to very poor Irish immigrant parents. He had to leave school by the time he was 12 and he became a delivery boy. By the time he was 15, he'd saved up $100. He managed to turn that into $35,000. He lost it. A couple of years later, he built up a similar amount again and lost it. Then he went off to get a proper job. And he did various jobs. He was successful at all of them. He ended back up on Wall Street in the 20s. And he was a stock buyer. He was making a lot of money in the bull run. And he was going home in his aeroplane one day and he heard about the stock market crash. He reversed it. He went back to his Wall Street office. He burst in and he said, "Sell the lot, they're worthless." And that's where his nickname came from. And when he sold, he actually made 100 million profit. And after that, he became known as one of the biggest short sellers in America. And short sellers were not popular at that time. They were blamed for the stock market crash. And he was very good at what he did. And he piled up a huge amount of money. And he actually shorted his father-in-law's stock and collapsed the company. They had to pay him $1 million to keep the peace when it was found out. He basically was selling short, but time was catching up with the short sellers in America at that time, SEC regulation. So he quit while he was ahead, and he just decided to come back and buy stock. So he came back and he bought various stocks. They're all wildly successful. He bought Bendix washing machines after he got his wife to test it. Made a lot of money. And he wasn't afraid to go and invest in other areas. I mean, he was a big investor in gold, for example, when it had a big bull run. Made a huge fortune there. He slowed down a bit later on. He got a job in Thomas McKinnon. And he actually underwrote the Grumman Aircraft Corporation's stock flotation, which was very, very successful. Then he retired. He had a few $100 million, and that was the end of his investment career. And I actually quite like his story. It's quite a colourful story. If you read up more about him, I can't do him justice in this short video. But what can we learn from him? I did a video a little while ago featuring some guys called the Fisher brothers, who I also said were better investors than Livermore. Why? Because they held on to their money. And that's what Bernard Smith did as well. He knew when to quit. So he had very set objectives for how much money he wanted to make, and he would be gone. And I think a lot of traders can learn from Smith in this respect, because a lot of traders hang around too long in trades. And they suddenly get excited, they get greedy, they want to pyramid up, and it's a huge mistake. I've always been a believer that if you've made enough money on your account, forget the individual trades, you should take it, be happy with it. If I get 10% on my account at any one time, I'll shut it down, start again. I think a lot of traders make money, but they have a real difficulty in hanging on to profits. And I think that's what Smith could do. He could keep his profits. He was also very decisive in what he did, and he could see the reality of the situation. I mean, take the example, you're losing on your stock market portfolio. You don't just take a loss, you then reverse and go short. Now, most traders just can't do that sort of move. They get fixated with their opinion of where the market should go. Okay, they might stop themselves out, but they won't see the opportunity on the other side. And on many occasions, if investors are stopped out of a currency pair, they don't want to trade it again. They'll move on to another pair, and they'll leave it alone for a while. That is often a mistake. It doesn't matter. The market doesn't have a memory. So I think hanging on to your cash is a kind of underrated tip in trading. When I mean hanging on to your cash, I mean taking a profit on your overall account. What else do I like about the guy? I like the fact that he would go and trade anything with his strategy. And I think, yeah, if you've got a soundly based technical strategy, you can trade any currency pair. I've always been a big fan of basically trading a wide variety of pairs rather than just the majors. You often get great opportunities, for example, in the crosses and the exotics. And also, yeah, why not try other markets like gold or silver or oil? It doesn't matter. If you've got a soundly based technical system, it should work on anything. I also like the idea about the guy that he didn't really have any formal education, and I've always maintained, yeah, formal education has got nothing to do with trading success. It is all about discipline under pressure. And I think Bernard Smith was one of the true great investors of his day, and it's worth reading up on his life story. It's very, very colourful. So I hope you enjoyed this short video on him. As per usual, thank you for watching me. Take care and have a good day.